Have you ever heard a wealthy person say that you need a lot of money to start investing, or that real estate is always a guaranteed path to riches, or that you have to time the market perfectly to make money in stocks? These are just a few examples of the biggest money myths out there, and it's not just regular folks who believe them. In fact, even some wealthy individuals have fallen for these myths and may not realize that their financial decisions could be impacted. But fear not, because in this video we'll be debunking these and other money myths that you may have heard before. But before diving into more about that, let me first welcome you aboard for this episode of Finance Arc. On this channel, we set sail on a journey into the vast realm of financial matters, where we guide you through every step of the process and assist you in navigating the challenging world of finance, from simple budgeting advice to more advanced investing strategies. So grab your life vest and get aboard the Finance Arc. First, investing is too risky. Investing can be intimidating, but it is important to understand that all investments come with some degree of risk. Diversifying your portfolio across various assets and investment types can help spread risk and minimize losses. It is also crucial to educate yourself on investing and the fundamental principles of risk assessment to make informed decisions. Successful investors like Warren Buffett, Ray Dalio, and Jack Bogle advocates for proper risk management and diversification. Bridgewater Associates, founded by Dalio, is known for its focus on risk management and the use of diversification to minimize losses. To manage investment risks, individuals can take steps such as researching different investment options, assessing risk levels, and utilizing tools and strategies to help manage risk. By taking these steps, individuals can gain a better understanding of the reality of investing and potentially achieve better returns while managing risk appropriately. Second, you need a lot of money to start investing. Imagine being a college student with a part-time job and a few $100s in your bank account. You might think that investing is out of reach, but that's not the case. With online brokers offering low minimums for investing, you can start with just a small amount of money. Ray Dalio's story is a perfect example of how anyone can start investing, regardless of their financial situation. He started with just $300, and with the right knowledge and strategy, he grew his wealth exponentially. Warren Buffett and Jack Bogle have also emphasized the importance of starting early and consistently investing over time. So what steps can you take to start investing with limited funds? How can you learn about different investment options and build a diversified portfolio? With the right resources and a solid investment strategy, you can start investing with just a few $100s and potentially grow your wealth over time. Third, real estate is always a good investment. As billionaire investor Mark Cuban once said, avoiding stupidity is easier than seeking brilliance. This sentiment applies to real estate investing as well. Rather than rushing into a purchase or making impulsive decisions, it's important to take the time to carefully research and analyze the market, property values, and potential risks. This includes conducting a thorough inspection of the property, researching local zoning laws and regulations, and considering the potential for rental income or resale value. Additionally, real estate investing requires a significant amount of capital and can be a time-consuming process, from finding the right property to managing tenants and handling repairs. It's important to consider the overall costs and potential returns before making an investment in real estate. Fourth, debt is always bad. Debt has always been a touchy subject for many people. We often hear horror stories of people drowning in debt and struggling to make ends meet. However, as we mentioned earlier, not all debt is bad. In fact, some types of debt can be a powerful tool for building wealth and achieving financial freedom. One prime example of using debt strategically is investing in real estate. By taking out a mortgage, you can purchase a property that has the right potential to appreciate in value over time, while also generating rental income. With careful planning and research, you can leverage your investment and potentially build long-term wealth. Of course, not all investments are created equal, and it's essential to do your due diligence before taking on any debt. So, what do you think? Can you think of any examples of good debt that you or someone you know has used to grow their wealth? Fifth, you need to be an expert to invest. Investing can seem intimidating, especially for those who are not familiar with financial terms and concepts. However, the reality is that you don't need to be an expert to start investing. In fact, some of the most successful investors have emphasized the importance of investing in what you know and understand. Peter Lynch, for example, is a well-known investor who managed Fidelity Magellan Fund and achieved an average annual return of 29% during his tenure. He believed that everyday investors can achieve success by investing in companies they understand and believe in. Of course, some basic knowledge and education are necessary before investing your hard-earned money. This can include learning about different investment options, understanding market trends, and risk management strategies. However, with the abundance of educational resources available online and through brokerage platforms, even novice investors can learn the necessary skills to make informed investment decisions. Sixth, the stock market is only for the wealthy. Many people believe that the stock market is only for the wealthy, but this is simply not true. With the rise of online brokerage platforms, anyone with a computer or smartphone can easily invest in the stock market. In fact, some online brokers even offer commission-free trading and low minimum investments, making it easier than ever for individuals with limited funds to get started. It's important to remember that investing in the stock market does come with risks, and it's essential to do your research and develop a solid investment strategy. But with the right resources and a little bit of patience, anyone can potentially grow their wealth through stock market investing. 7. You need to time the market to be successful. Many people believe that to be successful investing, they need to have a crystal ball and be able to predict the movements of the market. However, this simply isn't the case. Timing the market can be a high-risk strategy, and even the most experienced investors can struggle to consistently make accurate predictions. Instead, successful investors such as Warren Buffett have emphasized the importance of taking a long-term, patient approach to investing. By focusing on the fundamentals of a company and holding on to investments for extended periods, investors can avoid the stress and volatility that comes with trying to time the market. 8th myth: money can't buy happiness. The adage, money can't buy happiness, has been around for a long time, but is it really true? While it's undeniable that money alone won't bring you happiness, research has found that financial security and stability can play a role in overall well-being. Having enough money to meet basic needs like food, housing, and healthcare can reduce stress and provide a sense of security. Additionally, having the means to pursue hobbies, travels, and other interests can enhance quality of life. However, it's important to note that beyond a certain point, additional wealth may not bring added happiness. The key is to strike a balance between financial stability and other sources of happiness, such as relationships, purposeful work, and personal growth. So, do you agree that money can't buy happiness? How do you define financial security and stability, and what role do they play in your overall well-being? Thank you for watching and learning about some of the biggest money myths out there. Remember, just because someone is wealthy doesn't mean they always have the right financial advice. It's important to do your own research and make informed decisions about your money. Don't let these myths hold you back from achieving your financial goals. Keep learning, keep growing, and always question the status quo. Are you ready to take control of your finances? Subscribe to our channel for more tips on savings and investments. Don't forget to turn on notifications so you never miss a new video. Let's grow our wealth together. Stay tuned.